Hello, investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. This is the VIX. It's the CBOE Market Volatility Index. And as I've mentioned each and every week, this is a contrarian indicator to the S&P. So in other words, it's inversely related to the S&P. So if we're expecting the VIX to rally, then we're expecting a sell-off in the S&P. Now, last week, I put out a forecast that was pretty aggressive, saying that the VIX would most likely move back up to the 20-period moving average. And the main reason for that was because we saw this long stretch of red here. This is known as a stale red light. And while we did get some green candles on Tuesday and Wednesday, we did not move back up to the 20-period moving average. And I think we will do that next week. So what I'm going to do is I'm going to erase that line, and I'm going to redraw the line just like that for next week. Now, notice down at the bottom of the chart here, we have two oscillating indicators. One is the stochastics. And you can see in the past year, the stochastics right now is on the yearly lows. So that is giving us an indication of oversold on the VIX. Now remember, inversely related to the S&P. Oversold is bearish for the S&P. So I do believe that the stochastics is going to move up. We'll probably get a cross here of the signal line, which will give a buy signal for the VIX. And right here, as I magnify that for you, that is the CCI also showing an oversold condition. I think that next week we'll get a buy signal right there as the VIX crosses over that minus 100 line, which is the green line down there. Now let's go right to the S&P, because the S&P is going to show just the opposite. You'll see here we have a long leg. It's pretty aggressive move up this week. But look right there, again, as I magnify that for you, that's a spinning top. And we're seeing that right after this gap has filled. And if you know anything about gap rules, the trading rules that we put out, 80% of the time after a gap fills, the market reverses and goes the other way. So I'm going to remove this line, and I'm going to draw this out for you to the right and say that we're most likely going to pull back and test this support level. So looks like we have a step up in support. Although there's a gap down here at the lows, I think we're going to test this level first before we rally and go higher. Now again, look at the CCI and the stochastics. The stochastics is starting to hinge lower. Now, interestingly enough, we have a high here on a high back here on the spiders. But the most recent high, which is a higher high in price action, is showing a lower high on the CCI, and that's known as a negative divergence right there. So we want to pay very close attention to that, because we saw that happen back here right before the big sell-off. Negative divergences is something we have to pay attention to. And the CCI down here is overbought. It has not hinged lower, but I think that the CCI will start to head lower next week. So that's my forecast for the S&P. If we look at the Qs, we're going to see a similar scenario here where the market is overbought. And as I zoom in here for you, you'll see there's a gap below the market right here. I think that gap will fill. But before I get to this, I want to show you a tool that is on most of the trading platforms, and it's the Fibonacci retracement tool. And if I go here and click on the percent right there, if I go to this low and stretch it to the high that we have on Friday, you'll see that the 50% pullback point right there coincides with the 20-period moving average. Let me magnify that for you. The other thing is that the 50% mark on the Fibonacci retracement tool brings us right to this gap fill point right there. So we also have a negative divergence on the stochastics as it's hinging lower. I expect that this will cross and generate a sell signal there. The CCI is already heading lower. I think that will cross with a sell signal. So my target is going to be the gap fill point. Let me erase that for you right there. And I'm going to draw the line forecasting the pullback to the gap fill point, at which time I think we will most likely see a bounce as prices reverse. All right, so that's for the Qs. The diamonds, again, it's going to be very similar. I'm just going to not use the Fibonacci tool right now because it's going to be very similar. 50% is going to be right here. And you're going to see that my forecast from last week is going away, and I'm going to have the pullback point right to the gap where we might see a bounce right there. Same thing. We have a hinge in the stochastics. We have the CCI overbought. And we still have a gap below the market down here, so I'm going to leave that as a secondary level of support as we move into next week. Again, I'm expecting a pullback right across the board. Now, if we look at the Russell 2000, ticker symbol RUT, this is a more broad-based index. Interestingly enough, we gapped up on Friday here, and while we did pull back a little bit on the Russell 2000, it didn't get all the way to my support level. So I'm going to erase this line and say the pullback is going to happen just like that. First level of support right here. Second level of support right here. Look at that CCI. Look how overbought that is. So I'm expecting a hinge lower with a possible cross and a sell signal. And that is our forecast for the Russell 2000. Now, a week from this coming Monday, we're having our open house Q&A session. Just go to the Market Guys website. There's a link right on the front page where you can register. It's free. Seating is limited, so it's first come, first serve. Our audience is growing quite rapidly as people are looking for ideas and maybe even a little comfort to ease their fears about this market. Volatility for the trader is very much our friend. And for the option traders, they're having a field day right now because the added volatility is increasing their return on investment. So if you're interested in learning more about how to trade options or equities, we also have trade alert services on our website as well. So you enjoy this Easter weekend, and we will talk to you next week. So long.
This video segment is a small part of what the Market Guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.